Welcome everyone to the Kendall Report, Monday night. What a quiet day. We got a little bit of selling at the end of the day, but as somebody correctly called, that 4206 was magical. And it was interesting because the markets were swinging off the open. If you watched, I've been telling you folks about that reversal trade. We were trading literally the low tick right when the market opened, and it rallied from 84, continued on all the way right to 4206. And yesterday I talked about the R1, S1, maybe S2. Well, we didn't get any of the like. We didn't even get to an S1. It was very, very quiet. For hours, it was swinging between maybe 97, 98 to 206. It was just swinging back and forth there for a while. was a couple prints down in the 90s again. Then toward the close and overnight now, we're looking right now at the ES at 4180. So, title of this video tonight is Getting Ready for the Fed. Let's just get through all the economic ideas and earnings and all that, and then we'll start setting this thing up for the Fed FOMC meeting. So yesterday we got construction spending. It was up. I thought it might be down. It's up. So actually residential bailed that report out a little bit there. If it wasn't for the strength in residential, it would have been a negative report. So that residential rotation that's happening out there, or stabilization, we'll call it more than a rotation. It's just really stabilizing out there. Folks are starting to get used to these higher yields. But there's also, I don't want to get into a big real estate scenario, but there is also some other issues where there's no supply out there. Sellers don't want to sell. Nobody wants to, get out of their 2% mortgage. So there is somewhat of a bottleneck, but it looks like the new homes maybe are the only place that there's going to be supply, and that's even limited. So a little deeper, and I wanted to go there. So ISM manufacturing was at 47.1, the previous 46.3. So it's actually improving. I'm still looking for that recession I was talking about last night. As we come into today, really, there's a couple other things, but factory orders coming out, no one's going to care. Expected to be up 1.4%. There's really not much out there. So let's go ahead and let's get into talking a little bit about what my expectations are for the Fed. And it's going to be fairly boring because it's going to be what the Fed's going to do. They're going to stick to a couple things. We're going to most likely see a 25 basis increase. I actually don't think it's the final one yet. We'll see. We may have one more round, maybe another 25. I've talked about this before. My terminal rate was 525 to 550. There might be more. If you flash back just a little bit, you remember me saying that the Fed wasn't going to stop until they broke something. Well, they're still trying to break something, and it won't break. That thing is the employment situation. So we just continue to see the strength in the employment, and we'll see this week as we go through and just see how this thing sets up. But I always think it's funny when Powell is telling us that we don't know the numbers yet. They know every number. Okay, they have estimates. They know how the numbers are setting up as they come into the month. Don't buy into this. Well, we didn't know. We found out when you did. No, they didn't. If they did, then there's something really wrong with the system. I would want them to know all of the numbers ahead of time so they're making the best possible decisions if there is such a thing. So they're going to do this, in my opinion. They're going to stick with the inflation story. We got to do that, and they're going to let Janet Yellen, Grandma Yellen, is going to carry the flag to try to put all the noise in the system, just like she was doing today, right? So it's going to be about the debt ceiling. They're going to start fear mongering, all that. So we're going to start to see that story kick up. Whether or not anyone really cares, we'll find out. I do believe it will be resolved. We'll just have to see how ugly it gets. No one knows that, and I don't know how far they'll push it to the edge. And in the past, they've pushed it really close to the edge. They're not going to default. That's not going to happen. None of those things that are the concerns. And I think there will be somewhat of a muted response, but we'll see what Powell comes up with in his conference call. I would just tell you, normally on Fed Wednesdays, I do a live stream. I'm not going to be able to do one this week. I have some conflicts that are not going to allow me to be here at the studio to talk to you folks. So I will. I'll try to do my best tomorrow night, and I will also tell you that tomorrow night I will also go through the yield curve and some expectations there. I'm not going to do it tonight. There just wasn't enough time for prep for me to get ready. So I'll work on that tomorrow as well. Looking at my notes here, that's pretty much everything at the moment. I just don't see any change. There's not going to be a pivot. I know I sound like a broken record, but there's not going to be any pivot. They're not going to indicate they're going to pivot. Why would they? What's going on that would cause them to pivot? The employment, the economy? No. Everything's stable. There's lots of mixed numbers, and everybody has their favorite chart, all the bears anyway, and maybe the bulls as well. But both sides of the markets have their favorite metric. They have one metric. Look at this. This is why this is going to happen. It's just clickbait, folks. There's a lot. It's a very complex situation. And I would also argue, and I may have discussed it last night, but not only is there's a rotation internationally that happens. I think I did discuss this. There's all types of ebbs and flows that are happening all over the planet. There are areas that are doing really well. There are areas that are flat. There are areas that are failing. Like South Korea numbers are ugly. But when you start to look, you look into UAE and that whole region there, Saudi Arabia, Turkey, there's a lot of places where things are very, very positive, and it just seems to be growing. And I saw somewhere, I think it was on Twitter, somebody was talking about why is the DAX going up in Germany with all the inflation and all the problems. This flashes me back when we were talking, I want to say it was probably 2020 pandemic times, maybe a little bit past that, maybe into 21. But the whole thing is the markets can be an incredible inflation hedge because everybody's repricing and all these companies are getting priced in all the inflation, and it just grows with the markets. I mean, based on inflation, then if that were the case, we would have collapsed. And like I've said before, the markets just continue to stay in this sideways range. Here we printed 42 handle again, and we got a little rejection. This isn't much, but I think there will be some more. We're trading 41.80. The high was 42.06 that we talked about, and that's a 26 handle, rejection. It's not even really worth calling it a rejection. So we're still just very stable up here. I'll go through all the technicals here in a minute. It is interesting. I'm going to cover the Wavetech database here in a minute, and there was a reasonable reaction to a flat market. S&P was down 0.18, NASDAQ down 0.11. Russell was basically flat, up 0.01, so it was flat. So nothing really happened today, but it was interesting to see what happened in the database, which I'll show you here in a minute. But I just can't emphasize that if you're expecting some kind of pivot, there may be a bullish event, but we'll definitely have plenty of volatility. And I apologize for not being available on Wednesday during the markets. So I'll just have to, I'll do my best to cover the aftermath on Wednesday night and set us up as we start to come in to the rest in the end of this week. So let's go ahead and get into the database. Shouldn't take an awful long time to get through the stream tonight, and let's see what we come up with. So we backed up a little bit. Yesterday we were at 50.27. We had 701 sells, 219 buys, and we're back to 46.71. Everybody knows the number 42% is the magic number. And we're still above there. The intermediate database is around 65%. So we're on an intermediate basis, we're still very positive. So like I said, if we look at the forward-looking part of the database, that's always fairly encouraging. And just mentioning I'm just trying to bring something up here, somewhat random, but I haven't shown you this for a little while. Bear with me one second. Here we go. So this chart here is what this is on the intermediate database. We are right now only 65. We're still approaching this. There's a 72% range, between 72, 78. It can get up into the 80 handle, but this is typically a peak, and that still means that there is a fair amount, at least 100 market days once we hit to that level for the market to go on. So what we're seeing here, the gray area is the percent bullish from the database. The blue is the S&P, and that's just showing you that forward walking. So we haven't gotten to the peak of traction, I don't believe, on the intermediate. So there's more rotation to come in, which will be interesting, especially if we get it here in the month of May. So everybody's talking about the, the whole idea that we're going to collapse here. I've never seen this database be wrong at that level. Typically, even coming into 2020 and January 2020, we were only, I think, 30% bullish. We had been selling a lot of our institutional clients. I didn't know a lot of the retail environment then, but our institutional clients were calling me like, Bob, where are we getting all these sells? I'm not sure, just, but the market had actually started to roll over ahead of time in 2020. And then, of course, we got all the other stuff that followed. And we were already well positioned. On the short-term database, we saw that big turnaround. But this database typically is not 65+% bullish, and the market goes collapsing down. So I would expect that this at least 100, 120, these are trading days looking forward. So that's the better part of 6 months, folks. That's 5 months from today. That's putting us into September, maybe October, before we start to see really some sort of a top in this pattern. So just going back to database right now, I just want to look at the daily database a little bit deeper. There's 6 of the 12 sectors that we have. We use a Thomson Reuters sector breakdown. So it's 50% on the sectors. Groups is 39, 46 on the symbols. And we're still just seeing a lot of a fair, I would say about a 30% cash level in our average portfolio. If I were to bring up some strategies and show you those, there's still a fair amount of cash actually still in here. We haven't gotten really crazy bullish, even at this 65%. And those of you that use Wavetech, then you'll know that typically, if you, just as a round number, if you have 20 stocks in a portfolio, right now you'd be about 12 of them would be long, roughly, if you go with this 65% level. Somewhere between 11 or 12 symbols would be long, and that would put you somewhere between, depending on your allocation amount, between 65 and 75% invested. So you still have 25, 30% in cash, even in this environment. Because like I said before, it's not that it's super bullish here. It just isn't bearish. I guess that's about all you could say. And I keep saying that if you look deeper beyond the indices, you'll find a lot of opportunities, some good stocks, and they're not just all the popular stocks, the FANGs, the Teslas, all that. It's not about that. There's a lot of secondary stocks here. And I just would tell you, those of you that have the indicators, somebody made a comment and the light went off for me the other day. It said, I wish we could search the whole TradingView database for ideas and signals. And this is the way you do it. You do it through Wavetech. And so if you are interested in that, it's, $97 a month, $3.80 a day, and you can have some visibility on all kinds of levels, and it's very powerful, and it's a good way to do it. It's domestic markets only, U.S. domestic. Someday I expect it will be maybe not as vast as the TradingView is, but certainly we're looking at adding some other international markets where we have some concentration of users. Let's go ahead and get into the technicals here. All right, we'll start with the S&P hourly as always. And we're seeing, it's kind of interesting because yesterday we did have a pretty good sell signal going. We had the algos were starting to cut through their first, second derivatives. We're still in somewhat of a decline here on the PPM2, but we're only at a minus 11, so we're not in trend mode down. It looks like we're trying to stabilize here again. And it was interesting because yesterday I probably showed you we had some these big Fibonacci targets up here. Well, as soon as we traded below the first hour's, actually it was 11 o'clock, so the third hour low, when we took out that low, they stopped calculating, so it was no longer a valid projection. We don't have any upward projections at all. The only thing that suggests right now is that we're probably should be working up into the London Open. I don't have any indications beyond there. These algos are good for three to five bars. At least gives you an understanding of what could happen. But as the real-time values come in, these will recalculate based on the algorithms, which is a auto-regression type strategy. But it does give you a really good feel for forward-looking. You can use this on a 5-minute chart, which they can be absolute killer. I can tell you when we were trading up there at 4206, the algos were screaming sell the 1 and 5 minute. Those of you been in the live trading room, the live trading room, I need to tell you folks, it's no longer open. I closed it down a couple months ago, and it's not going to be open anytime soon. Just I don't have the allocation of time to dedicate to that. And it's unfortunate because we had a lot of fun in there. But the bottom line is, if you know that I use a 1 and 5 minute for intraday trading. So if you're looking at the algos and you have these indicators, then you'll see there was right on the money yesterday. There was actually some Fibonacci targets on the downside that were ultimately hit. I'm too deep talking about them, so let me show you what happened. And this was there were a couple targets here. This is a 5-minute chart. But when we were up here, you started to get right here, literally at the high bar, this thing turned south. And this was right at the 06 level. And we ground sideways, but we had these downward fib targets, which is where my cursor is. There's 3 targets here. And they were 41.87, 81.77. And we printed down about an hour or so later, about an hour and a half before the close. We printed all the way down here on this bar down to 84. And so it was almost down to that fib target too. The reason why I show you this is this was just amazing. So if we go back to the hourly, we're starting to get, we're close to probably about 2 hours from where we sit right now of starting to see the potential for some acceleration. You can see the let me blow these up so you can see the predictive SMAs are starting to turn up at that same time. So we should see the market start to rebound above there. And the cross of the second derivative will, if that occurs here, that will tell us that we should be able to ride and stay above this 10-period moving average, just a simple hourly moving average. That should get us to that an upward slope. And if I suspect that we might see some upward targets, we'll see how that goes. I'm going to go through the daily and go through the market grid for daily in a minute. You'll see why that setup that I just talked about is really important. So let's go ahead over to the daily. It's interesting. The daily's got is the predictive. It's showing that the 10-period moving average is trying to turn down, but actually for the next 2 sessions we should stay above it. And I would look at the market grid. Yesterday's high was, as we know, is 0625, which and there is a little bit of a difference on the TradeStation market grid that I show you every night versus the trading view. And I just want to cover that right now, is that the reason for that is that they're different databases and they have slightly different numbers. I'm not sure. We've tried to research why they're a little bit different, but it's just the only thing I can tell you is in Wavetech and PortfolioXpert, we have a database. It's actually legacy database that goes back to 1980. We've been maintaining that since, I believe, 1992, and we've walked that forward. So every database, I won't get into deep in data. We used to say data, that word was our four-letter word at development meetings, because it's very dynamic. So there's a lot of data points. I suspect that maybe TradingView isn't as good as cleansing their data as TradeStation, or the other way around. I don't know who's right. And the point is, you work with the data that you have. I think the number was 403.88 or something instead of 0625. For all of the indicators, everything was developed in TradeStation, so that's why maybe the accuracy, I don't know. And I've been a TradeStation user for since I believe, 91. So that's what, 31 years. So there's even user studies in the software that I wrote back in the early 90s that were incorporated into the platform. So, but I just want to make sure, because I know I've gotten emails, seen comments on Twitter about that. I just want to cover that real quick. So those of you that see slight differences, that's why when I'll show you the TradeStation. So let's go ahead and take a look at the TradeStation data. Just got to get it up here real quick, folks. There we go. So we look at the data here. Yesterday, you'll see here that the high was 625. We see R1, this is interesting, 04. I don't know if there was some calculation difference or what happened. So 04 even. That's interesting, actually, because it was 0625 last night. Probably some data got corrected. This is one of the things that I have talked about for years, and just come back to finish the data story. Is data is dynamic. It is alive. So we do something, and I'm sure TradeStation, anybody that runs and maintains a historical database should be doing what we do. But we go back 3 days and overwrite the data, because the exchanges have been known to change data as much as 2 weeks. So maybe a high print they take down. There's all kinds of data manipulation going on. So, all you know is it doesn't have to be the exact number, but it needs a number that you understand that you can trade off of. So sorry to get so deep into data tonight. That's why we called it the four-letter word. So let's go back here and look at today. We're looking at R1 now is 41.19. The 41.99, and R2 is 42.15. And it would not surprise me, actually, to see the potential for an R2 print today. 41.71. We could get S1, R1, and I'm going to go back to TradingView just so I can show you why I'm saying that. And if you think about what I just said on the hourly chart, the hourlies are leaning a little bit to the bullish side. The algos are saying that we're going to uptick just a little bit, potentially back to 0.20. And I'm going to show you something I didn't show you earlier. We got new Fibonacci targets to the upside today, okay, on a slight downtick. So it's interesting. 44.27. I won't get too crazy on these numbers. We've had these type of numbers. This could be what I call an island, which means it gets one calc and then it goes away. We'll watch that for tomorrow night. But the algos are suggesting that there's going to be a slight uptick here, and maybe it's coming in just as like I said, the title of this video tonight is preparing for the Fed. So we might have a little bit of a bullish event coming in the next couple of days. Who knows what comes out of that, right? I could be wrong. They don't raise the rates. They could pivot. They could do all of that, right? then everybody will have to figure out whether that's bullish or bearish. But for right now, it's interesting that these numbers came out. We've seen like, if let me just draw it in because I want to make sure everybody sees the spot I'm talking about here. And let me just draw that in real quick. So this was an island right here, those dots, and then here's one right now. So this is new as of today. And this is what I was talking about. You can see the algos are trying to turn up here on all of these. Even the PPM 3 is turning up. So I think that is somewhat interesting. The only thing that's happening down here is the 200 is acting like it wants to turn down, and maybe there'll be a drawdown toward that 200. I don't expect that at the moment, but it looks like for at least 1 or 2 sessions, we should have some upside. And if we did penetrate through some of these numbers, then this 40. I have to go back to the daily, but if we get to this, we get above this high yesterday, and if you look at the market grid, if we printed an R2 tomorrow, that might be enough to kind of influence market sentiment a little more. I don't think much is going to happen ahead of the Fed, but I need to mention it since it's there. I don't want you folks to scold me for not, why didn't you tell me? Well, I told you. So, but downside risk, it should be minimal today. I think everything's going to stabilize. Like I said, we should see that type of configuration. Okay, so going to the NASDAQ, it's interesting. This is a similar situation. I'm going to bring up the drawing pin again real quick just to point out, this kind of ties together my last comments that I just had, is here was a 4 or 5 day island. We never came up to those fib targets, but I want you to see something here on NASDAQ, and the PPM1 algo is suggesting we've got an increase in the indicator coming, which tells you we could possibly get the trend mode and start to see the 10-period moving average. You can see this white dotted line here. That's where the 10-period moving average is. This is a simple 10. That's going to be your primary support levels there. We should be able to hold along there. And I would suspect we're not going to get it today, but if we come into tomorrow, if we stay stable, we could see the market grid kind of turn up a little bit here. Maybe we start to set up a channel. I'm getting a little bullish looking at that, but this is telling us down here, the algos are telling us that we're not going to be declining, but there's going to be a slight bias to the upside. And if you recall last night, I was talking about exactly that I thought there would be a bit of a bias to the upside over the next several days. We got Jay Powell coming. We got that show coming on Wednesday. And so anything's likely, but it does look like all of the, primarily the S&P and the NASDAQ has a upward slope here for the next couple of days. All right, so we'll look at the Russell. Russell just kind of continues to hover around these downward slope moving averages. Not really, it went down. I talked about yesterday that we went down almost to fib target 2. And the algos are still suggesting sideways with the next 2 days, 3 tops. We should start to see the potential to rise above these moving averages again. And I've been having too much fun with my drawing pen tonight, so I'm going to bring it up one more time because I think really what we've got here is one of these sideways box patterns that's set up, and it's the one we've been in for a year. I could actually expand this and go to a weekly, but we're just seeing this trading in this box in this range, and now we're starting to move up. Whether we get back up to the 200 or so, we'll see. And still out on which way we come out of this box. My bias is here just because of the database on the intermediate level being at 65 plus. I think there's a better and even chance that ultimately these stocks start to get out of this range, and probably have a bias to the upside. So as far as any real action, nothing. We should stay underneath the 10-period moving average, 1778, and probably just operate within the market grid. And that just give you a range. It's kind of hard to see on the right-hand side. It's over there. The full range, 1744, 1806, but we're probably looking at S1, 68, R2, 1792, and that maps out. That's a little bit above that 10-period moving average, 1784. S1, R1 would be a much better map relative to the indicators, the PPMs, and the moving averages. But yesterday I was talking a bit about the potential for rates to come back in. Well, that all changed today. It was interesting because Yellen was talking about the debt ceiling and how it was going to be catastrophic. I mean, what a great messenger. She's just terrible, I think. But it's just the idea that I guess maybe it makes sense, but the Biden administration, everything is a disaster, and they got to make it sound very dramatic and fear based and all that. So if the Republicans don't do what we want them to, and we don't agree, then it's going to be their fault, and the market's going to go up. And that's not any kind of partisan statement I'm making, but that's what they're saying, right? So the realities is that none of that's going to happen, but that's part of the negotiation process. We've seen this movie before, but we saw the 10-year bounce back pretty quick. I think it just comes right back into the range. I think this was whatever. Maybe it was just a reaction to her comments. Maybe that's exactly what it was. And like I said on my opening comments, I really believe that Yellen's going to be carrying the torch. She's going to be the fear monger, and Powell's going to be Mr. Level. We're trying to fight inflation, keep the economy. He's going to be Jay Powell that we know, very boring, very straight down. And Yellen will be telling you that climate change is going to cause interest rates to go up and everything's going to blow up and all of that stuff. She's that ideologue that is talking and guiding trying to guide the markets into some kind of friend. I don't know what their goal is. I have no idea. I can't figure out what they're actually doing. But I think this is up at that, toward that upper end of that range I talked about. All of a sudden, we're right here, 354. We printed 357. I think we stay in there. There are still valid Fibonacci targets, so I will mention them. As the fib targets on the upside here right now are 356.8, which we hit today. That's been in this pattern going back to April 13th. That's been on the books, and it's still valid. So we traded there again. We traded just above it about a week ago, 6-7 days ago. And then the next level is at 368. And we haven't looked at it real close, but I want to bring up the weekly. And this is sort of interesting because I haven't brought this up for a little bit. But we're looking at right now trading up at the upper end of the market grid for the week. R3 is 358, so there we go. And then 362 is RXT. But what's interesting about this chart is that we have some upward projections. Maybe I feel like sometimes it all blends together, but there are some upward price projections here, which I'll mention, which is 401, 429, and 447. Now this is the 10-year. That would be a retest of the highs that we printed over here. We got into, I'm just trying to see what the high range of the numbers were. I think 425 or so on here. Yeah, it looks like this was probably the high right there, 429. So we got the 430. So that would be an interesting move up. The algos are suggesting more of a steady flow right now. PPM 1 is a negative 1.05, which is a downtrend, a very strong downtrend. So that's going to keep the pressure there, and that number right now is at 353. So we're trading just above it. If we get much more above it, then the market gets out of balance. It's going to pull back at least at 353, probably 345. This is my argument here as far as this just staying along these moving average lines that you see here even on the projections. I'll make it a little wider so you can see them a little better. Let me get off screen here. You can see how they're really just kind of waffling. This 21 period moving average coming through here is going to be the higher end of that range. Let's take a look at the 2-year. And it's interesting, the 2-year didn't get quite the pop. So we got basically what we saw is a little flattening of the yield curve there. But this here is really about the same. There's a little bit of increase, but we should stay right along these lines. I'm just going to blow this up so you can see the projected SMAs in here and the PPM. These are being calculated off the PPMs. So you're just looking at this really just in this range. So those ranges right now and those averages are up around 424 and about 402-ish in that range. So call it 4% to 425. There are some upward projections here, just like on the 10 years, that we're looking at the possibility of 460, 5%, 525. But with this downward market grid, with the PPMs really not looking for this type of response, I don't see that happening at this time. I think we just continue to be flattish in a range. The market grid's done pretty good job of defining the range. In fact, there's only been, you have to go back to, this is a weekly chart, go back to October, since the high end of the range has been penetrated as far as the market grid goes. And then, of course, in March, when we had the banking situation going on, we got below the market grid. But we've stayed well within this range. It's very good at predicting the outer bounds of where these rates are likely to go. It's very few penetrations. It's probably the typical stat on the market grid is that it will only penetrate about 12% of the time. So basically one out of 10 bars. It's actually maybe even 1 out of 20 on some of these markets. So it doesn't happen. We'll get up to the upper bound or the lower bounds of these market grids. They're very good at predicting on a weekly, monthly, all that. And and I just remembered as I'm well into this stream tonight that I was supposed to do a long-term version, and I did not. So I apologize. I will do it tomorrow night, okay? I apologize for that. I got so deep into the thought of just flowing, and I didn't make good notes, but I will have them ready tomorrow night. I apologize. I just see that is a common trader SLA. That is a common thing that happens. Maybe we'll talk about that at the end of the stream tonight, so hang around if you're interested. But the bottom line is, I apologize. I just remembered this is Yeah, well, I was supposed to go through all the quarterlies and all that. Promise tomorrow night it'll happen. Okay, so let's go ahead and let's get into crude, see if we can get through the rest of the stream here pretty quick. All right, so crude continues to chop along. We're staying right around these moving averages. This is the weekly. It's kind of a broken record. There's no real upside targets. There is some Fibonacci there right here, 81, 84 on a downside, 70. The minimum is 76, and we're printing here 75, 61. The market grid suggests that around 70, 75, 97 where we're trading. The extreme is probably S2 weekly, which would put us down here at the 74.20 level. Take a quick look at the daily, really just defining this range. Matter of fact, notice these dots up here. This is one of those island Fibonacci projections I talk about. All goes on PPM1. Looks like they're trying to tell us that we're going to maybe get back over the 10, but right now we're just sandwiched. A lot of these markets are just in these sideways trends right now. So maybe we can see us trade back into the levels I just mentioned off the weekly. All right, so the gold is next, and gold algos are suggesting we're going to stay right under this, around this 10-period moving average. This has just been drifting down here, and we're finally coming into that the 40-period moving average that I've talked about. Has been rising underneath this pattern. So this, unfortunately, if you look at the algo down here, the cyan line there, these indicators are mapped out to by color. So the 40, the PPM3 maps out on the 40, and you can see a couple of days from now, it looks like there's a potential decline coming where we're going to trade through this 40-period moving average. So I got to bring up the weekly to brings us back to the 10-week moving average. But check out the 10-week. It is suggesting we're going to roll over. I'm a bit concerned that we're going to at least trade down to the 21, 1340, 1325, and there's some potential that if we don't hold that level, that we're coming all the way back into high 1800s, 1850s, something like that here. And like I said, I always make my Peter Schiff jab, but Peter Schiff got bullish right here again. He got bullish over here. I think Harry Dent was hanging around with him or something. So gold has some vulnerability. There's good support though, because the PPMs are 0.89 right now. There's good support there. Next week will be the challenge. Maybe it has something to do with the Fed. If I am correct, that the Fed isn't, not only are they going to raise 25 this week, that the next meeting they're going to raise another 25. They might pause for a minute and hit it the next meeting, but I think they stay with it. I think they're going to do 25 and another 25. We'll see what kind of metrics between point A and B, which would be the Fed meeting this week and the next one. We'll see what plays out. But this is part of that Q2 story, and coming into Q3 is that really going to be a continuation of everything that we've been seeing. The economy just doesn't look like it wants to fail, and maybe you've got your favorite metric that you've convinced yourself that it is that the economy is going to fail and we're going into recession. Maybe it will. I'm quite pleased to change my mind as far as our strategies are what we primarily do. What I do is portfolio construction and management. That I just don't see a lot of vulnerabilities there. And index trading is something completely different. They're not anywhere close to the same. But gold looks like some vulnerability here in the next couple of weeks. There's pretty good slope on that 10 period moving average. If you look at the average here, it's still got a couple of weeks. It's got some pretty good momentum under it. So that simple 10 is going to be the support. But as we come into about 2 weeks, maybe 3 weeks from now, we'll see how the algo set up after some real price action gets calculated. But it does look like there's some vulnerability as we come in maybe toward the last week of May or so, something like that. All right, final market will be Bitcoin. Somebody I saw on Twitter was saying, I thought you said the 10 period moving average is going to hold. I did. I realized I answered it back on Twitter. So if you're listening, it was the 10-week moving average is the SMA that was being watched in the 40-day. So those are the important averages to watch here. But it does look like even the 10-week is very close to failing, and we could start to run a little lower. But basically, we've seen sideways markets. We got the RTXL back on way back in around the banking crisis on March 13th, and for the most part, it's just been locked in a range here, and it's been a broad range. There's been some really good weeks and reversals, but it's basically a range bound. And the 21 is probably going to be the key area to watch. The PPM2 is plus 2.22. Now, 0.25 or greater is a trend. So this is 2.22. This is basically what is referred to as an extended trend to watch. And I'll bring this up real quick here. But this is kind of the map for the probability map. So we're pushing this 2 range. This is almost in parabolic curve range here. So this is the parabolic score. 2.5 is here. So we're right at this cross point here, and finding out whether it would expect that it was going into parabolic. But I'm going to go back to the chart here to show you. And what's happening is PPMs are turning down, so they're actually peaking out at these levels. So if that's the case, we're not going to see the parabolic curve. We're probably still, I'm going to go back to that graphic again. What we're still at is in this extended level here. It's probably very close to where it extends. And these are round numbers that typically will happen. So we're just probably pushing the extended wave up into a two handle here on this stuff. When you start to get into these parabolic curves, it gets 4+. The numbers can get really big when these markets go vertical. Okay, folks, I owe you an apology for not doing the long-term analysis I promised last night. Today was a very hectic day, even though the markets were quiet. Very hectic day, so I apologize. I am putting a big note when we finish here that make sure that I do the long-term analysis tomorrow night. We'll also probably maybe take a quick look at the yield curve, because yield curve is becoming somewhat interesting. It's still, like I said, it's starting to steepen a little bit, so we'll see what happens there. Yeah, just a couple of things that I said I would talk about. Yeah, the indicators are one-time purchase, and I am working on that project is going to change some substantially. And I made the mistake of saying too much. One of my old IT guys and software engineer that I still work with for over 20 years, he always used to say, Bob, do not sell something you don't have yet. You do not do that. And that was primarily because I was going to get pressure, end up putting pressure on him. So I'm not going to do that. But there is some pretty cool stuff going on that I'm working on. And there's going to be a pretty giant package. And those of you that have bought the previous package, is going to be a discount. And there's actually going to be an introductory discount for these things. But I'm working on a number of things. I want to tell you really bad. But the Wavetech product is something completely different. It really isn't made for trading. It's made for portfolio management. So we have a bunch of you I know that watch. They're running your 401ks, doing things like that. That's what it's made for. It's not made to trade. However, if you are interested in using it for trade signals, those are there. And then if you have the indicators with it, it's really good. I've been threatening this package, and this is all on me, folks. I just, as you know, I was out of the country for a week, and it took me the better part of last week to recover after being on the other side of the planet. So I'm getting everything together. We had a business meeting today that discussed a number of initiatives that we have going. And so, yeah, I will just say right now that we've got some really cool stuff going. So keep hanging around the channel. I'm trying to get it out. We don't have a massive group of people, so we're working on it. and the release of the new indicators and this other project will be, I think you'll find very interesting. But there's videos to be made, all kinds of write-ups to do with product write-ups and all that. So there's plenty that has to be done yet. But I will tell you, it's March 1st. It's coming along pretty good. I'm hoping that there might be, I don't know, I don't want to get too crazy, but there might be multiple releases. There may be an indicator update, and then there may be this other thing I'm working on. So I don't want to put it out there until I'm clear on that particular situation. So anyway, yeah, so yeah. Yeah, I see somebody who's probably been in the software business. Yeah, it's a lot of work, folks. You know, we maintain multiple software platforms, and it's a lot of work. It really is. Yeah, and I've got some really exciting things. Last weekend, I've just sitting here looking at some of your comments and just interacting with you a little bit. Last weekend was an epic weekend for me. Saturday night, I couldn't go to sleep. I was up till 3 a.m. my time doing something, and I will share with you when it's appropriate time. And it was very exciting. If I would have been a lot younger, I probably would have taken a couple Adderalls and stayed up for about a week. I'm serious. It was that exciting. And now now that the week started, I can't get to it right now. There's no way I'm getting to it tonight. So, but it's nice to know that that excitement. So I always tell everybody, all you younger people watching me, there's still a lot of excitement in life, even at 70. It's really cool. So anyway, thanks again for watching. I promise you tomorrow night, long-term analysis will be done, and we'll go through the whole bit. So bring the popcorn, get the popcorn maker out tomorrow night. We'll probably take a little bit more time. All right. Have a great evening. Good day trading tomorrow, and we'll talk to you tomorrow night, same time. Actually, I've been on ChatGPT for over 5 months. So almost an early adapter. And it does not have something to do with that, but thank you. Thank you, Smurfs, for all the good work. Levi is not around tonight. Great. Thank you, mods. FF, I do. About a year and a half ago, I did some on a live stream. Maybe I'll do that again one day. Still think we should put a Wavetech band together and have a conference. I would love to do that. Have a great evening, everybody. See you tomorrow. My favorite bass of all time, Rickenbacker 4000.